What if I told you that by the end of this video you'll gain a better understanding of ICT concepts? Well, in this video I'm going to break down a trade that I took using ICT concept and using a strategy that I'm currently using to get funded. Don't worry, it's going to be a top-down analysis from the daily all the way down to the 15-minute and my entries. So if that interests you and if you think you'll get some value out of it, stick around and watch the whole video. Let's start off with a daily time frame and I'll tell you what I was seeing. So as you can see, this is a daily time frame and we're coming down with a lot of momentum. Right here, this is my down candle and these white ones are my up candles. So we're coming down with a lot of momentum, so as usual my bias is bearish. I'm only looking for sells coming into the session, so that's pretty much my daily bias done for the day, right? We're coming down with strong momentum. I can see that we're trying to we've targeted these lows right there. As you know, there's liquidity there. Then there's all of these lows, and after that, ultimately for this target around this big figure number, those are my targets, so that's why I'm bearish and coming down with a lot of momentum. So that's my daily done. Jump down to the hour, and now we will just skip to, it was a Monday, so we will just skip to the Asian range right there. So before session, this is what I was seeing, and as you can see, we've impulsed down and we're moving very correctively up, so that's usually a sign we're going to carry on a continuation pattern. So it's something like this, what I'm seeing. We've impulsed down and we're seeing some sort of correction like that, and then after that we come down, because as you can see there's sell side liquidity building up right there, therefore it's more likely to go down. So all of that is adding to my daily bias, which was bearish anyway. So stacking confluences always helps you in your trade and makes your trades higher probability, so I was happy with that. There's no fair value gaps here, but that's fine. Maybe there is on the 15. So if we jump down there, there's one there, but that's already been filled, and apart from that, no, there weren't any fair value gaps. But what I was looking for is, as you know, power of 3, right? So this is the Asian high, a sweep of that, there's liquidity there, buy side liquidity. So I want to see a sweep of that right there at 2 AM as well, because that's the London kill zone, specific time and price. ICT keeps going on about it, so we have a sweep there. And then I was looking for this sort of pattern and a move down basically, right? Everything's saying bearish, so I'm going to look for shorts anyway. Then I drop down to my lower time frames. I'm just going to highlight where 2 starts from. So as you can see at the bottom, this line. So after this is where 2 starts. So at this point I want to see a sweep of buy side liquidity. So let's see what happens. Where's there? As you can see, we've swept buy side liquidity, so now I can start looking for an entry model. So yeah, I found on the 4-minute actually. So we going there, went up, kept going up, and there. Guys, quick announcement. If you're finding this video useful and you want to see my free trading notes, well, check them out in the description below. Completely free. All my notes, everything I personally did, put together into one PDF. Check it out. There's also some other free stuff there, so check it out as well. So this low, these are equal lows, so there's not actually a swing low. But this, however, is a swing low. So we can draw a break in market structure right there. And now all I'm looking for is a fair value gap. So as you can see, there is one here. So you can put your entry right there. And also there's a massive fair value gap formed right there. So now I got my premium and discount tool out and I measured it from here all the way to there. And in the premium is where you can expect to sell and expect price to come back. So that's why I set my order on this fair value gap and not the other one. And this was my order. Yep, this was my order right there, and I had 7 pips stop, so oops, 7 pips, so it was above here. Yep, covering this swing high as well, perfect. And then simple target of a 1 to 2, which is right there, and then we just see what price does. So it goes up, tags us in right there, and then plummets right down. So as you can see, this is why premium and discount is so important, because there was this fair value gap here as well. However, this one got tagged in. Why? Because it's in the premium of this leg, right? Measured from there all the way there. This is in the premium, hence why it was higher probability. It could have also tapped here, but my stop was covering it. So 2 fair value gaps. I took the second one, it hit the second one. I was covered anyway. That's the trade breakdown. Hope you guys got some value out of it, and let me know if you want me to do more of these. That was the trade, and that's currently the strategy I'm using to get funded. I'll keep you informed on the funding challenge for sure. I'll see you guys next week. Happy trading, stay safe, and yeah.